Hello, this is Lizzie. Welcome to today's episode of MTrading Global Market Recap. One of the big news this week is the dollar that bounced off 2-year lows on Wednesday as US data showed a sustained recovery in manufacturing activity, while the euro retreated from its highest level since 2018 on profit taking. The economic data released on Tuesday showed that manufacturing activity in the US accelerated to a near 2-year high in August amidst a surge in new orders. The Institute for Supply Management Index reached its highest level since November 2018. The US data that followed similarly upbeat manufacturing figures from China and Europe. The growth of deferred demand contributed to the correction of the dollar rate. In retrospect, this was a reliable data. The dollar went down by about 1% since last week after the Federal Reserve announced it would focus on average inflation and higher employment with a change in the Fed's policy, giving a way to keep US interest rates down. Traders feel influenced to sell the currency. That sentiment was reaffirmed on Tuesday when Fed spokeswoman Leila Brennan said that the central bank would need to go for additional stimulus to help the economy weather the effects of the coronavirus and deliver on the Fed's new promise. U.S. Treasury yields fell after the speech for additional stimulus is likely to come from aggressive bond buying. Having reached the level of 1.2, the euro fell, which was due to overcrowded long posing. This is because there are too many unsecured positions open on the market to buy the euro. The market has been speculating for a while on how the Fed's new policy has weakened the dollar. But the flow of traders buying the dollar back is likely to pick up in a week or two. This is all for today. Do subscribe to the channel to get notifications on the latest news. Continue to stay safe and do have a wonderful week ahead. Goodbye.